Hello, hello, hello. Just like to welcome you guys to our session for today. Our main topic is going to be about liquidity. So a brief introduction of liquidity. Liquidity is like areas in the market where the market will likely draw to. When I mean draw to, I mean to say what there is money there for the big players who are moving the market to actually go to. You know, like for example, the market, it left liquidity when it took this buy, right? So what does liquidity actually mean? Liquidity means that there is orders resting below here. There's money here. So what does it mean? It means that assuming that I want to start buying the market here, right? Where it is here. I want to start buying here. I would have my buy entry here, I get it? And I would have a stop loss just below the lows. And maybe my target would be somewhere up here, right? So what is below here? It's money, and it's a lot of money because a person that entered with a buy here, they have a stop loss round here. Ne? Then there's someone that said, okay, now I'm looking for a sell opportunity. They have something called a sell limit. They have a sell limit somewhere here. Meaning when the market comes down, their order is activated and they take a sell to the downside. Likewise, liquidity on the top side is inversely to when we're looking for a buy. Usually we take the market here, okay, I want to start selling the market, right? When it fan, and I want to take my profits down somewhere there. Ne? But usually the market would come and take us out. That's what usually happens. Okay, so there are setups that usually I would trade. I would see, okay, the market is moving in a downtrend, right? And it did what? It broke structure. Let me change this, make it my break of structure. It broke structure to the downside and started trend downwards. But I know, okay, there's an order block there for me to enter myself, right? Then I would enter my sell position here. Okay, I'll enter my sell position here. Sorry. Knowing that these lows, they must be taken out. Sometimes the liquidity can be not, it won't be like perfectly straight. It won't be perfectly straight all the time. Sometimes it can be a bit lower, taking out liquidity from this low. Sometimes it can be a bit higher above Nyanakwal, just failing to take out the liquidity yet, then that's when it's gonna come and take the liquidity out, right? So here's an example of what I just described. Okay, the market took that liquidity, then started buying, but it bought to our point of interest for us to start selling. to our order block, then it's sold, right? Likewise here, but this one, it failed to take out this low first, but it went up, then came to our point of interest to start selling to the downside. Okay, let me show you a typical example here on the chart. Okay, so clearly we can see that this market, it was bullish. It was bullish, right? Bullish, bullish, bullish. Then we had our break of structure. So our break of structure, right? Then we see we have kind of relative equal lows. That is liquidity. This is the liquidity zone. This is where we would see when the market comes there, it's gonna start, throwing to it. It's like those guys, when they bought the market here, it's like they're inducing us to start buying as well. They want us to go into this direction. But they know, okay, they want to start selling the market, and then they sold the market, boom. Taking those stop losses of buyers. Let me show you. I got the buyers keep fan. Those buyers are here, right? So mostly we want to take out these highs, right? So we're in this trade, we're comfortable riding this trade, we're comfortable riding this trade. Then, hey, market reverse, reverse. Then it took us out. Okay, I have a stop loss file, it's at 30 pips. He greedy and I want more. I was like, hey man, I'm not gonna let it go. Then this stop loss, like, hey, it took somewhere 200 pips, a range of 200 pips, It took 200 pips going to the downside. So it's better for you not to actually trade where there's liquidity, It's better for you to hunt the liquidity. When you are hunting the liquidity, you are not the liquidity. There's a saying that a lot of people say, that deep into smart money, but trade don't be the liquidity. If you are not the liquidity, you are hunting the liquidity. So the aim is not to be where you are losing money. The aim is to be where the money is, where the money is hiding, where the money is located. Okay. Likewise, I just want to show you another one. Okay, there was liquidity fund. Those relative equal lows, right? Then the market aids that liquidity. Also, there's another form of liquidity. Nakibita external range liquidity. And there's internal range liquidity, Okay, like, let me just describe it, Fana. Okay. So we have a swing. So in that swing, the market sometimes comes here, then forms like a pattern, form a pattern, form a pattern. Then it goes down, then boom. But it doesn't go down like just in a straight line. So within this structure, right, we have external range liquidity. EBITDA external uh, external. external range, and we have internal range. Okay, so the internal range liquidity is like assuming that you saw okay, there's an order block, the last up candle nyana, kwale, right? That's what you saw. Like, that's assuming that you saw this one. Instead of aiming for this low ko tlase kwala, just go for the low hanging fruit, you know. Fruit e o itseng gore o kgona go e kapa ka bonako fela, o kgona go e tsaya fela, o itse gore you just aiming for small targets fela. O itse gore okay, I want to say that liquidity in that internal range liquidity. You know, okay, you made your nice money, right? You are trading in line with the trend. Then, God willing, okay, you saw this pullback Fana, maybe Fana, there was a order block or something else. That something else could be a fair value gap. I'll go into it, but it's not of necessity for now. I don't way bonnie this setup. Let's say you saw a setup like this. Then you see, oh man, there's actually an external range liquidity. Then you go for it. You know, you're like, hey, I can still go for it to the downside. That's your external range liquidity. Okay, let's try to look for it in the chart. Like here we have external. And a final we have what? Internal. Okay. So equal lows, equal highs, internal range, external range liquidity, they kind of serve to do the same thing, you know. They are there for you to have targets of where the market is likely to trade to. Because I won't lie, we are not gurus, we are not crystal ball gurus where we see the future. No, we don't see the future, but our analysis tells us where price is likely to draw to, you know. Like for example, Fan, this was a beautiful liquidity zone. I want equal lows, equal lows. You know, okay, we have a order block somewhere, Fana. We want to trade to them. Let's see if it's gonna. Oh, price is still here. So likely we have an external range. Sorry, we have an external range, right? We have an external range liquidity where we know for in future because we have an order block Fana. We know And this is actually I'm doing a setup for next week, Claro, because I see Claro, hey, this is likely to play in our favor. This is likely to play in our favor. Taking it to the downside, we have an internal range liquidity. Gape ke e fana. And for us, we edit, we blend it with market structure. Agar we blend it with market structure, lesson mabani, just to follow where the market is going. Just to follow where the market is going. Agar we have a high, fana, just have a high. Agar this is our high and a low, 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 low. Then we have a lower high, lower high. Agar agar fale rinele break of structure. Agar fa we had a break of structure, break of structure. Then inside here, it's internal range, like it's its own trend. You can trend to it because kind of this is a 4 hour, meaning for each candle is 4 hour closes, you know. Sometimes you can just be someone who trades counter trend, but it requires you to, you know, just have a plan for it. Not don't just throw okay, I'm trading towards it, but just have a plan of action to say, okay, since market logo classic one, I can trade to the upside. I can just go up kwale. Leon, Leo, fela. Okay. Hey, sorry, I used the wrong thing. I used the wrong thing. Can just trade go dimulo fela. Just take it to the upside fela. That's what you can do. But I I I I don't advise you when you're starting out. I don't advise you when you're starting out to trade counter the overall trend. Because trend is downwards. Trend is moving downwards. I don't want you to lose money. To lose money. No. Get it here. Back to the train of thought to in our lower low. Agar. Then revenue this correction. It's a correction phase. Let me just try to get an ellipse. This is a corrective phase in the market. The correction, the correction at this thing. Then market took tipile mole, then sold to the downside. Likewise, this is a correction. Harhane, this correction, it has a lot of pips. Aka cheka from Mona Kwakodim. That's like 300 pips. That's a lot of pips. You know, you can make a lot of money through 300 pips. But it's best to trade in line with the trend. You know. Then we have a lower high, right? So we are waiting for it to create the full leg going to make a lower low. But inside Mona, yeah, trader, you can trade it, you know. Yeah. Kopa, someone to unmute there just to ask a few questions if you want to ask a question. Anybody with a question?
Mm-mm.
So should I show you other examples of liquidity, ne? Liquidity zones, tse di berekileng.
Yes, please.
Okay, okay, let me use another pair. Let me use another pair. Hey, quick question. Are you guys do you guys know order blocks, or like should I not go into it? You know?
Go into it, like briefly explain it.
Okay. Okay, let me just find a pair. Uh yeah, let me use Nasdaq. Hey, but guys, be careful when trading Nasdaq. Hey, Nasdaq, hey, yeah, move, Joe. You move the pips settings and then like a of a headache where you lose money. But when you make money, you're joyous, you're in the mood, Joe. You know. So yeah, okay, fine. Okay, delete everything. Let me just delete everything. Better yet, let me just use another broker, because this one, they are my analysis that I just focus on. No? I'm using Pepperstone for this one. Let me use Uwanda. I never use Uwanda. Let me use Uwanda. Okay. So liquidity, ne? Let's use liquidity. Remove drawings. Yeah, can I start there from the daily? Because Nasdaq ke market like it follows institutional trading like to a pip, man. Like you won't go wrong when you're using institutional trading when you trade in Nasdaq, you know. I wanna show you guys. Okay, where can I start? Yeah, on a daily. But I wanna start somewhere where it left liquidity tse dintsi fela ke le bontshe. Okay. Last year's market. Yeah, something like a last year's market. Okay. We had equal lows, Fana. Liquidity, equal lows. Then we had external range. Why I say external? Because hey, it's a swing. It's a swing move, I want. It's a huge swing move, I want. Because I wouldn't say this is external, but in the grand scheme of things, it's external range. But just for us, we are focusing on this swing. I want. But in the grand scheme of things, this is internal, then this is external in the grand scheme of things. Okay. So in this swing that we had market create liquidity zone for us, liquidity to our. Then we had an order block fana. Price he did what? Came to it, sold a bit, then retested it just to grab some orders before it went down. Then it created an engulfing candle. This is an engulfing because it ate this candle. It engulfed, beautiful candle. The following day, then boom, sell. Then go kasi, it take out that liquidity. Ibirang rejector going to the upside to do what? To fill an imbalance, a gap. I'll talk about it. I'll talk about it now. Then so let's look for other liquidity zones. This is also equal low, equal high. Doesn't look nice, but go on. Market there. Oh, it missed that order block though. It missed this one, but Fana, it's so we have our entry here because I got it, so it sold a bit, then retested again, then went to the downside. Then this one took out this whole range, this whole small range fan. Then boom, it took out this range. That liquidity zone gape also doesn't look nice, doesn't look nice. Let's use the body of the candle. Doesn't look nice, but liquidity, it's liquidity. But for now, I like to use the wicks because I know for the price it touched there before. It touched there. Now I use the wicks. Some people use the bodies of the candle, but I use the wicks. Okay, market retrace kwale. This whole zone is an order block. Why I say it's an order block? Because if we can go on a higher time frame, another higher time frame, let's say weekly or daily. Okay, on a weekly I won't see, but it's an order block in itself though. Let me just go back. So that range came there, filled it. Then seller for how many days? 1, 2, 3, 4, 4, 5 days. Seller 5 days. You know. Okay. Oh wow, this one, yeah, it's okay. Okay, finally we had a shift change, like a market to a change, like a break of structure. Now we are starting to look for buy opportunities. It's a change of character. I'll speak about it. I'll speak about what's a change of character. It's like when the market changed direction. Um, Now we are looking for equal highs. No, now we're not no longer looking for equal lows. Okay. Mm. Market alone. Ono so actually the equal highs tse dintsi. Okay, we had an equal high here. Okay. Oh, oh wow. Okay. Let me just go down on a lower time frame because the sometimes on a lower time frame properly. Liquidity zone fana. Okay. Where else? Where else was liquidity? Where it got taken out? Yeah, somewhere here. Got taken out by this candle in. Let me see if there was an order block. Last down candle. Mhm. Also, liquidity graph. Yeah. So those are a form of liquidity where it just it's a tool for us to use for us to know okay where likely are we going to in the market. Where likely are orders lying or resting above or below in the market, you know. So that's a form of liquidity. The equal highs and equal lows. So Aliyah asked me to touch upon order blocks, right? So order blocks, ne?
Oh,
So order blocks for now, I use them as like my entry. It's an entry tool, yeah. Plus, it can be used as an exit tool. An exit tool, you use it like when you are trading aggressively against the trend. The meeting is gonna end in 6 minutes. I'm gonna start a new one with the same link, ne? Okay, change the color. Let me make it since it's in a downtrend. The last green candle. Okay, the last green candle. So meaning for when the market uh I mean last down candle. What am I saying? Last down candle. The last down candle, right? Okay, order block, meaning for it's a source. This is the source of this buying power. I want meaning those guys that form the market, they took something called a hedge, meaning they are buying and selling at the same time. I want when they buy and sell at the same time, they have open float of losses and they have open float of buys. I want when they take buys on people that had like sell orders. Let's say I have a stop loss fana, so say like I sold the market. Maybe I was like, okay, market there week somewhere fana is gonna sell, right? Where is my stop loss? My stop loss is somewhere above here, right? My stop loss is somewhere here. I get. So what happens is this candle steady and they're gonna stop people out that have stop losses, right? So order block is there for us to actually know where the institutions, those guys with the big money, where they started buying. It's like a footprint, man. It's like they put their foot in the sand and we can see, hey, some big elephant was there, man. Someone was there. Motho o tlile kwa le a gata, man. A tlogela footprint ya gagwe, boheme footprint, Then he took off. We can see it by the candles tse di bayang, wa bona? Then e dirang market. Market o ba kwa tlase fela, over trader down, over trader to the downside. To do what? To close the orders that were in losses. Sabone. When they took sales, like sometimes it's gonna go down here, then come retest, then start buying. So now use an order block as an entry tool. Sometimes your order block, because I get happy higher market was line. The last up candle fan, that small up candle. Kire green. That small up candle fan. It can be our exit zone, where we exit the market. You see? So let me show you. Yeah, especially fan. I'm trading aggressively so against the trend, right? I see, or okay, we have a last up candle fan. Zoom ball. We have a last up candle fan. That is my order block, right? Then kere, how market the fan? I'm gonna take a sell. Okay, market came, stopped us out the first time, then retested. I would say, okay, fine. After that retest, the setup is still valid. Then I go take a sell. Where's my target? I'm targeting where the previous source of the buying power. When this market started to go up, it did what? It sold first, meaning for these people, they started to buy and sell at the same time. They had a sell position fana and they had a buy position fan. The buy position was in profit. Now they needed to close that position. So when they close that position, they fool around, they fool around, they fool around. Because when I'm hey, nah, fana, I'm gonna take a sell because I see the market selling Ibirang going to the upside. It took him out. Then mutwa wa panic and we are not thinking since since the market is not selling anymore, let me take a buy. The thing about the market are fueled by fear and greed. You fear, you are panicking, you are fearful, you are greedy. You're better, you're frustrated. So that frustration, that's what they do. But if you know the rules, like you make rules for yourself. It's like the market is a chaos environment. So in that chaos, for you to maneuver through the chaos, you must have rules that you set for yourself. Those rules will be like your map throughout the chaos. Then, as I said, if we take a sell there, this will be our exit position. Likewise, our exit position can be our buy position as well. Okay, we didn't actually enter directly more like after that break of structure, we looking for a last down candle. Can be here to do what? To take it to the upside, to take it long. Oh. Okay, let me start a new meeting because we have 1 minute left. Let me start a new one.